Hey, Bill, what's going on? Just everyone, this is Bill Percha, a colleague of mine who works in the employee benefits side of the business. And we're going to have a brief discussion today on some of the challenges we're seeing clients face in his segment. Bill, what's going on? You doing all right?
Well, I'm doing good, but for the past couple of years, our health insurance rates in Michigan have been going up by double digits. And we just got another report out where both Blue Cross of Michigan as well as Priority Health announced that those double-digit increase will continue to go on with group plans that are renewing after mid-year here. So each year going up by 10, 15%, especially on the small group side, and even larger for larger groups, and even more for groups that are experience rated. It just keeps on going up and up and up, and pretty soon no one's going to be able to afford this mess.
A lot of the conversations that I've been having on the commercial side, this is a topic amongst them where they're referencing, look, we've seen these increases year after year, and a question that has been posed to me, and I always chuckle about it, is I thought the Affordable Care Act was supposed to make the cost of coverage more affordable. Yet I've seen nothing but increases in this market since. What gives? Why is that
Yeah.
continuing to happen?
For one thing, they shouldn't have named that law the Affordable Care Act because it's anything but. Lots of reasons. From everything to competition has been wiped out. To give you an example, in 2010, prior to the Affordable Care Act being passed, we had over 20 fully insured carriers in the state of Michigan. We have 4 commercial carriers now. The cost of drugs has skyrocketed. To give you an example, in the year 2000, for group plans, the portion of your healthcare premium that went towards medications was about 7% of the premium went towards the
Okay.
cost of drugs. In 2025, that number is over 40%. Many of the insurance companies actually now own their own PBMs under a different entity. And what happens is they're artificially setting the price above what it actually takes to make that drug. The manufacturer is then cutting back checks to the pharmacy benefit manager in the form of rebates. Those rebates are not filtering through to the people that are actually paying the premium. So in essence, our insurance companies are double dipping. They're paying on the books higher claims for these medications, which are being translated into higher premiums for our groups. On the flip side, though, they're getting rebated back this money that they're not including in their medical loss ratios. We have a lot of money that is going towards the profitability of these hospital systems. Many of them are owned by private equity firms now. So all these costs are weighing on the American public because we have to pay the premiums to pay these costs and these claims. In essence, our claims continue to rise. The Affordable Care Act did nothing to stop claims from rising, to control the cost. The costs have gone so high, especially for those individuals that are above 4 times the poverty level. They don't have access to group health insurance. Maybe they're self-employed, what have you. Those people can't get any subsidies to help pay for their individual health insurance plans. Many of them are going without insurance, which is the exact opposite of what needs to be done. So I'm out there working with my small groups and giving them the traditional options. Let's move you from a PPO to an HMO. That'll save 10% for lifestyle plans. Let's offer a HSA, a high deductible health savings account compatible plan. The higher the deductible, the lower the premiums, et cetera. But those things are just Band-Aids. We have to control the costs, and there's nothing that a small group can do to control the costs. Some of the other entities that I'm dealing with, the groups, if they're young and healthy, I'll show them what's called a level funded plan. These are basically, they're on a self-insured platform, but the insurance carrier is going to do a look at your group to see how healthy you are. What happens on a level funded is they're getting rid of the admin fees of an insurance company. And you're on a self-insured platform, but they're going to account for what they expect your maximum liability to be and give you a flat premium for your employees for that year. If you perform better than what they thought, they will, in most cases, rebate back to you that extra that you just paid for that year. If you have a worse year, what's going to happen is they're going to give you a rate for the following year's coverage, and it's going to be a high increase. So you may have to move back to fully insured. Again, this is a Band-Aid that we're trying to put on so that companies can continue to offer their employees insurance at an affordable cost for everyone involved. Eventually, something's going to have to be done in this country to reduce the actual costs that we're all paying.
So is there one specific item that you find when consulting with benefit opportunities that can differentiate you from competition, whether it's access to benchmarking reports or what are other companies doing of similar like size and industry? What is one thing you find out there that assists with that?
What I find, information is key. In the small group market, it's difficult for a small employer to get information, even from their agent. So basically, I work more as a consultant with my employer groups. But let's say I start with a group that for the first time they want to offer a health insurance plan. Okay. And usually it's because they need insurance themselves too. So I show them the range of options that they can go through. But then also I show them what employees are actually looking for. So many times people have an insurance plan, they have no idea what it covers. You know, they say, okay, I got a plan. It's the bronze HSA plan. Well, you don't have coverage until you're $8,000 into it. That's a catastrophic plan. So I do a lot of explaining, not only to the owner, but to the employees that go on the plan, exactly what they have. You know, explain to them, how does your deductible work? How does the co-insurance work? The percentage that you have to pay after the deductible's met, co-pays, all these differences. If you have an HSA plan, what does that mean? What's the tax advantages of a plan like that and things? And then grow from there. As you're talking with employees and the employer, all of a sudden it's like, okay, wait, there's some dental things over here that we may need, or some vision things, or, you know, hey, you're not doing anything as far as protecting your income for your employees for short-term disability situations. You know, what are some other things you can do that perhaps you don't have to increase payroll, but you can give benefits to employees that are going to tie them to your company? You know, the better that you offer on the side, then the employee is going to have to make a determination. Yeah, I can go here for $1 more an hour, but wait a second. How come you don't offer health insurance, dental, vision, short-term disability, life insurance, you know, optional plans through AFLAC, pet insurance, all this other stuff that you can create a package that will cost less than just keep on increasing employees' wages. You know, so that's what we do.
Fair enough. That's good. Well, that's great insight. You know, you threw a lot of terminology out, and I thought the commercial insurance side was confusing enough. So on the benefits side, it's yeah, I could see how it could trip up employers, especially those that don't have a full-blown HR department in the know about what's happening today and what to look for in the future from there. So excellent insight. Appreciate it. And hopefully we'll get a chance to connect again soon.